Central banks around the world are now sounding the alarm, and Bloomberg is even taking it a step further by issuing another central bank warning. That means we now have two emergencies to look at. One of them is related to gold, but of course also to Bitcoin and the banking system. We have Alex Kletz from the Human Rights Foundation team. He says another 100 million people will get into Bitcoin. We have the world's first real estate Bitcoin treasury company, which has now bought 1,000 Bitcoin. Guys, things are really taking off now. And we have Coinbase CEO Brian Armstrong, who is also issuing a warning, saying the world needs cryptocurrencies more than ever because global debt levels are escalating further and further. We're going to take a look at these highly explosive topics. Smash the like button below for more bullish content today, coming to you straight from, well, the Orchard Meadow here in Germany. I'm back here in Germany for a few weeks, visiting my family and so on. Some people kind of misunderstood that. I made the video. I'm leaving El Salvador. Of course, that doesn't mean I'm leaving forever. Right now, I'm just in Germany for a short time, visiting a few people. I might check out one or two other countries, but sooner or later, I'll show up in El Salvador again. Let's get started now. If you haven't subscribed yet, hit the subscribe button below, and of course, leave a like for the Bitcoin price. The Bitcoin therapist says here, I'm not allowed to give financial advice, but if you're selling your Bitcoin here, you're a damn wimp. I mean, yeah, no financial advice, but that's just how it is. People who are letting themselves get shaken out by the sideways phase or the bit of uncertainty in the market right now, they just don't get it. We've never spent this long above the 100,000 US dollar mark as we have now. And now this is really, really important. In the first year of a new presidential election cycle, Bitcoin has never had more than one negative quarter. In the first quarter, Bitcoin's return on investment was minus 12%. There are still 6.5 months left in, well, this new year. That means we can't have another negative quarter now, at least if we look at the historical patterns. Sure, things can always change, but this is a bullish indicator here. We've got BlackRock here, who alone this week bought 1.2 billion worth of Bitcoin. I've mentioned this repeatedly in my recent videos as well, that the Bitcoin treasury companies, together with the Bitcoin ETFs and the nation states, are currently buying so much more Bitcoin than the miners are producing. So what we're seeing right now is absolutely like a supply shock. And we'll get to the central bank investigations in just a moment. But before that, we need to quickly take a look at something else. Now we have Cardone Capital and the Cardone brothers, who have long been known as major Bitcoin bulls, and they've finally gone ahead and done it. They're adding 1,000 Bitcoin to their balance sheet, making them the first real estate Bitcoin company ever, the world's first Bitcoin real estate treasury company, and they're planning to pursue a full Bitcoin strategy. So here, it's kind of like what Saylor did with MicroStrategy just in the real estate game. They say they want to combine the two best asset classes. And apparently they have 14,200 units plus 500,000 square feet of A-class office space. The group expects to add another 3,000 Bitcoin and 5,000 units this year. So 5,000 real estate units and 3,000 Bitcoin. That's pretty wild what's happening here. Ricardo Salinas even wrote a book about this, about why Bitcoin is a better investment than real estate. But here, they see both as equally valuable. But there's also Leon Bankum, who has some interesting takes on why Bitcoin could replace traditional real estate here. I think he's about to launch his book soon, the one he's currently writing here. Shout out to Leon. And we'll get to the new Coinbase warning that's making the rounds right now in just a moment. I've probably already talked about a Coinbase warning, but right now we have the central banks sounding the alarm globally. So now we need to take a closer look at what's really going on here. This actually has to do with gold and with Bitcoin. You all know that Bitcoin generally tends to have, let's say, a connection with gold. Often, for example, we see gold rallying first, and then Bitcoin just follows along afterwards. And now, unfortunately, we have this report from Cubasys, which is based on information from central banks. The central banks of the world expect a further increase in gold reserves, meaning that more gold will flow into central bank balance sheets. According to a survey by the World Gold Council, 95% of central banks expect global gold reserves to increase over the next year. A record-breaking 43% of respondents plan to increase their own holdings during this period. Furthermore, 76% of those surveyed believe that gold will make up a significant portion of global reserves in the next 5 years. At the same time, 73% expect their US dollar holdings to decrease. The responses from central banks in industrialized, emerging, and developing countries were relatively consistent. Gold is in high demand. And why is this so important for Bitcoin right now? It's really, really simple why this is important for Bitcoin. Because if central banks no longer trust the dollar, if central banks no longer trust US government bonds, then it's only a matter of time before they start accumulating Bitcoin as well. Gold is, of course, the first conclusion people draw here, because that's what they've been doing for thousands of years. But there will also be more and more central banks, like for example the Czech Republic, that will come to the conclusion, okay, hey, why not use Bitcoin here? After all, Bitcoin has similar properties to gold. And in addition, when gold rallies here, when gold rises, Bitcoin is always pulled up along with it, because a rising gold price is always an indicator of a falling fiat price. And when fiat falls, Bitcoin always goes up. We always see the correlation between fiat weakness and Bitcoin strength. That means if gold here indirectly causes or directly causes fiat to fall, then gold is, in a way, indirectly causing Bitcoin to rise. Because of falling fiat, price or falling fiat demand is always a good signal here for a rising gold price. Why am I rambling on today about a rising Bitcoin price? I'm still basically on the move here. I've been traveling for 20 hours now, right? I was on the plane and now I just went for a walk. But now I'm sitting here in the shade and recording the next video. I still have a bit of, well, I don't want to say jet lag, but you can definitely feel that 20 hours on a plane doesn't just pass you by without leaving a mark. You can also see here that the interest in gold is significantly higher at a few central banks, but for many central banks it's just moderately higher, and in my opinion, it's always only a matter of time before these central banks eventually make the pivot and completely switch over, including to Bitcoin. Even as Bitcoin gets closer and closer to gold's market capitalization, central banks will have no choice but to eventually swap over from gold. Look, you can tell I'm a bit confused. They have no choice but to swap over to Bitcoin, because as Bitcoin's market capitalization gets closer and closer to gold, more and more questions will come up, like, hey, why aren't you using Bitcoin in your central bank reserves if Bitcoin has a similar market capitalization but better properties? Ricardo Salinas even said it in an interview, I played it in a video a few days ago, that Bitcoin will overtake gold. In his opinion, it's even going to happen relatively quickly. And we're talking about the richest man in Mexico saying this, not just some random nobody. And he already clearly sees Bitcoin as the better candidate, which is why he holds the majority of his portfolio in Bitcoin and is currently considering going all in, putting 100% into Bitcoin. And then we have the second central bank warning here, and this comes directly from Bloomberg, where it says, US plans to ease capital rule, limiting banks' treasury trades. And this has something to do with central banks, but it also has something to do with banks. So now it involves various institutions because here they're planning to simply, well, the enhanced leverage ratios, or what are they called? Enhanced supplementary leverage ratio, that's the exact term. That's obviously a complex term here. These are supposed to be adjusted. I've already talked about this in various other videos, and now Bloomberg is mentioning it as well. And Bitcoin News is also saying that even if Bitcoin is down today, don't worry, the liquidity is coming into the market, and that's what I always want to tell you. In the long run, there's no need to be afraid here. And that's what you need to understand here, because if the requirements for banks to hold government bonds are lowered, then of course these banks will end up holding more government bonds. That increases the demand for government bonds. This supports the US government bond market and means that, of course, central banks might potentially have to step in less often. That means it actually relieves the central banks here, or in this case, specifically the US central bank. But of course, it could also be that this isn't enough and then the central banks have to step in, and the enhanced supplementary leverage ratios would have to be adjusted here. Additionally, maybe the Treasury would also have to step in, do Treasury buybacks, and we would need QE. Maybe we'll need all of these measures together, because this alone might not be enough. But it's interesting that Bloomberg, yes, one of the most relevant financial analysis institutions, is now also reporting on this. And that's the perverse thing about what's going on right now. We're actually dealing with two different things. On one hand, we have a weak dollar, and on the other hand, we have rising yields, and that's, well, quite an interesting combination. And that's why Coinbase CEO Brian Armstrong is making a very, very interesting statement here. He says here, the world needs cryptocurrencies now more than ever. I would tell you now, it's especially Bitcoin that the world needs. Debt is growing exponentially, inflation is paralyzing entire nations, and economic freedom is fading. It's time to strengthen economic freedom worldwide with cryptocurrencies. Again, I would say, especially with Bitcoin. But of course, when all these things are happening and people are constantly looking for new ways to pump money into the market, like through leverage ratios, and want to make it more and more obscure, then you simply need counterparts, like Bitcoin, for example, which is limited and can't just be expanded at will. And here, Alex Gladstein from the Human Rights Foundation, who is always very committed to human rights, had a really, really cool take. Let's take a quick look at that as well.
We shouldn't rest on our laurels, and we shouldn't think that Bitcoin's inevitable. But I guess my point to you would be that the real scaling issue with Bitcoin right now is users and people. As like Bitcoin on-chain today, without any major edits, could easily add another 100 million occasional on-chain users. But they're not there, and people don't get it, and they've been fooled into all this crypto bullshit, and they've been swindled and scammed by everything from WorldCoin to Solana to ETH or whatever.
So he's saying it's not set in stone that Bitcoin will completely prevail here. And he goes on to say, hey, we need to be careful. Sure, we can easily onboard 100 million new people onto the main chain here, no problem. Oh, look here, cherry tree. I'll have to check later if there are still some cherries left. Funny. But my grandpa says there should be a lot of cherries on the tree. Yeah, there are a few, but most of them are already on the ground. So unfortunately, we weren't lucky. Anyway, you can easily onboard 100 million people on-chain. And now the question is, okay, but do those people actually exist right now? And he says, Those people just don't exist. It's kind of like what Michael Saylor said, hey, it's actually obvious that Bitcoin will prevail, and all the information is out there. Still, 99% of people are asleep. I mean, for us, of course, that's also a huge opportunity. But that also explains why, despite all the bullishness and all the bullish news I keep putting out, people write things like, hey, with all this bullish news and what you're doing, Bitcoin should already be at 10 million. Yeah, sure, but only if everyone actually gets it. But not everyone gets it. A lot of people are still stuck in a coma, in a fiat coma, or, I don't know, maybe a bratwurst coma or something. And then it gets difficult for the Bitcoin price to really shoot up massively. Of course, we need new people for that too. But let's keep going here.
So I'm just saying, that's one way to attack the problem, is just to work on education and accessibility. I, at the same time, think it's very important to be thinking 100 years from now about what's going to be key. How can Bitcoin actually be freedom money for everybody in the world when Bitcoin's issuance ends is something I think about a lot. Or will it only be freedom money for very, very wealthy individuals? I think about that a lot. So, I mean, what you're working on, I think is important. And you've admitted many times that maybe you're just not quite communicating it the right way. All I'm saying is this is a long game, man. This is a 100-year thing. And being more collaborative with other people can only help you. It can't hurt you.
And that's exactly what a lot of people don't understand. When I talk about Bitcoin here, it's always about taking the long-term view. And he's also talking about a 100-year time frame. He's thinking about how Bitcoin can become freedom money, not just for some top institutions, but of course also for regular people. And what he means here is whether, at some point, Bitcoin transactions will even be worthwhile for people because they might just become unaffordable. And then we'll need second-layer solutions and so on. Of course, censorship resistance is also something that must not be lost here. If you just have some second or third layers, like Bitcoin treasury companies or Bitcoin lying around on exchanges and so on, then all of that is lost, of course. That's why it's super important. Get yourself a hardware wallet. I'll put a link below to a TREZOR hardware wallet, not a code, a link to the TREZOR hardware wallet, and you can use the code Bitcoin Hotel. There's also a discount with that. That's an absolute recommendation for the times. This way, you're truly sovereign. And just look at how green everything is here. Awesome. And then I'll add another code for you. Not the code. I'll actually put a link for you to 21 Bitcoin. There you can use the code Bitcoin Hotel and get up to 20% off the fees when buying Bitcoin. And then you can really get started by Bitcoin and even have it sent directly from 21 Bitcoin to your hardware wallet to your TREZOR with the auto wallet transfer. That way, you're seriously set up, and let me know what you think about it. See you. Until then, peace out.